What's up, you guys? This is Christian for Hustle and Bustle. Today we're going to see some myths and we're going to bust some myths. But before I continue, I forgot to mention in the previous video that I heard... This is so funny. Oh, this is just funny to me. I heard a coworker of mine the other day was saying how she's gonna have the perfect 850 score. She's gonna have the perfect... Why would you need the 850 score? Everybody over 740 has the exact same interest rate. And you know what? If you have 850 score, that means that you just have a perfect credit score for no reason whatsoever, because that means you never used it. You know, if you have a hard inquiry from last video, we know that that thing stays on your record 25 months. And if you have 850 and you ping your credit score for a house, first of all, they're going to hard inquiry it now, and then 30 days right before closing. So 30 days after. So you're going to have two inquiries that's going to lower a credit score to, let's say, 837. Okay, just an example. I don't know exactly how much it's going to lower it. So you're not going to have a perfect credit score if you're using it. But this is why you're creating that score so you can use it. So everything over 740, you're getting the best deal anyway. So why do you care if it's 850? Just to brag to your friends and be cool. We already have videos about it that you don't need to be cool. You can just maybe find new friends. All right, first myth, I addressed it last time. You need to carry a balance to build your credit. You should actually do the opposite. You need to pay your balance in full, not only by the end of the month, but pay it in full today. Pay it in full every 2-3 days, pay it in full every week, pay it in full whenever you can, so you can have as little utilization as possible. By carrying a balance, not only you're losing money to interest payments, but also you're impacting your credit utilization. Another myth that I heard is you should close a card before you open a new one. Which, for the life of me, why would anyone believe that? But again, people don't know. So this is so not true for two reasons. First of all, that's going to decrease your total accounts. If you had 10 total accounts with the average line of 5 years, with the average life of 5 years, now you're going to have 9. And if this card was 5 years old, now basically that's going to shorten. You're going to have, let's say, 3.5 years of length of history, which is bad. Second of all, that's going to decrease your total amount of credit line. If you had 5 cards that each of them had $10,000 of credit line and you close one, now you're going to get 4 cards. So you're going to get $40,000 of credit line. And let's say you open a new one with 10,000. Okay, your credit line is going to be the same. You're still going to have 5 cards, but now your age of credit will be highly decreased because card number 5, number 6, the new card, or the new card number 5 will have age of credit 1 day. So that's going to basically impact the age of credit. Another one that I read here is credit cards are for purchasing items you don't have the money to buy otherwise. Well, for a lot of people, unfortunately, that is the case. And those people are not living their best life, I'm pretty sure. So yeah, don't do that. That's just stupid. There are no penalties for maxing out your card even if you pay it on time. A lot of people think that paying in time is what matters. It's not. It's how much you utilize your credit. If tomorrow, again, I max out all of my 50K credit line and pay it within 10 days, which is within the frame of that 1 month, I didn't go over due date or anything like that, my credit score will plummet so fast. So yeah, that's not true. When you max out a credit card, that greatly impacts your credit card utilization and that greatly impacts your credit score. Having multiple credit cards is bad for your credit. Again, not true. It's more of how you manage those cards. Also, it is how many you have. The more you have, that's good. There's a certain amount of credit line that the banks see as good, and after a certain amount, they see it as potential money to be spent, so then they start seeing it as not good. For example, that's what I've heard. This is just a rumor. This is not a fact, what I'm telling you right now. Let's say you got $80,000 to $100,000 in credit line, 0 utilization. Now the banks might start seeing you as a higher risk because you have that much money available to you. Again, it's all risk assessment compared to somebody. Let's say I have a $500,000 portfolio and I have one credit card that I have just $10,000. This is one thing, but the same person with the same portfolio, he has or she has 100K of available credit. Now for the bank, that second person will be a higher credit or a higher risk because they have that money available, and shit can hit the fan at any moment. Where I can screw up just with 10K, they can screw up with 100,000. that's something to think about when you get some credit increases, which, by the way, get credit increases every 6 months, but ask, is that a hard credit pull? And when they say yes, you're like, no, thank you, I don't want a hard credit pull. Do that because I already got one credit pull just for a stupid increase of $3,000 on one of my cards. But generally, they're going to increase your credit line every year. If you ask, it's every 6 months. I even have the dates on one of my spreadsheets. When did I increase let me see if I can find it. When is the last time I actually asked for an increase? So as you can see here, I've increased it to this. So this is a little bit of old information because now this line is, about $10,000 higher because there was some increases. But see here, I wrote when they increased it when I requested, because last increase was December 20. Okay, and it was 6 months. And also ask, hey, how often do you increase? And just write that information down. This, I don't need that anymore because I already pretty much done with the credit game. I have the credit that I want. I'm not gonna need any more. So I'm pretty much done with it. Another myth is that your credit drops when you check your own credit, which I guess not true if you check it properly. If you go and tell a lender, hey, pull my credit because I want to see it, it's gonna drop. But like I said in the previous video, each of the companies that monitor the credit score, TransUnion, Equifax, and Experian, by law, they have to give you one credit report if you request it. You can do that at annualcreditreports.com. I suggest you request one every 4 months. Making a big payment, let's say you have $5,000 to pay outstanding and you pay it at once, compared to pay $1,000 today, $1,000 in 5 days, $1,000 in 5 more days. I mean, someone the other day told me that they pace it so they can see that they're making money and they're paying out. I'm like, bro, no one is doing that. Pay it outright, like we talked so far. Pay it outright from 5K to 0, and now they see, oh, his credit card utilization is actually 0%. That's great. We're gonna increase his credit score. Also, keep in mind, not all debt is debt, okay? If you have, for example, I have around $200,000 in mortgage debt. This is a good debt. That does not affect my credit score. I wouldn't say whatsoever, but almost at all. Now, if I had 200K in credit card debt, my credit score was going to be like minus 300 or something. I don't know. I mean, that's a joke. The minimum is 3, okay? Also, closing a credit card will not help your score. If you have listened to me so far, you would understand why. And we already, I think, talked why. Even if you close it before you open a new one, you should already know why that will not help your situation. There's another myth that there is only one single credit score, which is not. Actually, FICO has 9 models, Vantage Score has 3, and there's other maybe 500 different scores that every bank might modulate to pull whatever they want to see. Maybe some banks are more interested in your medical records. I really don't think that's the case, but I just made an example. Some want to see and give more weight to certain things compared to other banks. So there's Beacon Score, and there's plenty other scores. It's not just one, but the most common one used is FICO. Some people think that, if you have a better job that pays better, that will better your score, which is extremely not true. There's a lot of people who make over 100K or over 200K that has bad credit scores because they don't know how to manage money. They're a doctor, lawyer, whatever their job is that pays well, they still not good with money because our financial education, not the best. And the biggest one, some companies can fix your credit. This is true, but there is nothing they can do that you cannot do by yourself. So no one can actually remove accurate information from your credit score, okay? If you're had a late payment, that will stay there, no matter what they tell you. Reputable credit reestablishing services can help you come up with a plan how to repay your debt. But the only legitimate way to enhance your credit score is to practice good credit management. I'll say something that Dave Ramsey says, and I agree with it. If you want to live like no one else later in life, you gotta live like no one else now. With that being said, guys, if you enjoyed this video, please give it a thumbs up, subscribe, like, comment, and I think I already said that. Give me some ideas for new videos. Hope you enjoyed, keep hustling, and I'll see you next time.